and Bert Bainer of State Farm Insurance. They are experts in fire insurance policies and risk assessment. Howdy of Compass, a seasoned agent and broker navigating transactions affected by insurance issues. Anthony Ventura, our attorney of Ventura, Hersey and Muller LLP, providing legal insights into the implications of fire insurance on real estate contracts. Bill Murphy, our Assistant Chief of Operations Division, Santa Clara County Fire Department, sharing fire prevention strategies and role of local fire services in mitigation efforts. So we cover all these topics, from what's driving these challenges, how homeowners can do to secure their coverage, and how real estate professionals can protect their clients. So let's get started. If you have questions, please wait until the end. We'll give you the chance to ask questions. So let's dive in. To get started, I would like to ask Michelle and Bert, our insurance agents, how did we get here with all these current challenges with fire insurance?
Thanks for having me. Once again, my name is Birch and I'm an agent with State Farm. I'm going to give you the bullet points because I know a lot of you are going to have questions and a lot of material that we're planning on going over here. This started back with the Proposition 103 that was voted on by all Californians and was approved, which regulates the insurance industry. And with those regulations, there's several factors that are going into and affecting why we're where we're at today. Prop 103 gives the control of the insurance rates and premiums to the Department of Insurance and specifically the Commissioner's Office. And so when an insurance company applies for a rate increase, they have to go through a process that was set up by Prop 103. And it's an approval process for the Commissioner's Office. But with that approval process, there is also what they call a watchdog group. And their job is to look out for the public's best interest. I'm going to put that in quotes. And so one of the issues that the insurance industry is facing with Prop 103 is the lengthy time it takes to go through the rate process. It could take 2 to 3 years before an insurance company is approved for appropriate rate. And by that time, once the rate is implemented, that rate might not be adequate. And there's a lot of pressures that are impacting that timeline, especially more recently than in the past. The other thing that the Prop 103 does is it restricts costs that insurance companies can pass on to the state, pass on to their clients in the form of annual premium. And that is the cost of reinsurance. And reinsurance is what insurance companies purchase to help protect them against catastrophic loss. Those reinsurance plans have gone into force recently to back the fires in LA, along with a lot of the other fires we've had over the past 5 years. So it's a very important product that the insurance companies are able to access. So how does that impact where we are today? Well, the cost of reinsurance has skyrocketed. Not only the cost is if you can get it. So those are huge impacts with the insurance industry. And I want you to remember that we're not just talking about one particular company. We're talking about the entire industry. The entire industry is impacted, and that's why we don't have competition right now. And that's why the entire industry is pulled back. It's because California is not a place where insurance companies can do business for the reasons that we're talking about here today. Did you want to jump in?
No, good. Yeah, and with that impact, we saw in 2023 many carriers that have left the state because they cannot survive, right? We had a lot of carriers in 23 also go into moratorium, meaning that they're not going to write any new business. And then the last would be the carriers that are still in the writing new business, but with a lot of restrictions, and that's where we're at. And so 23 was a cleaning, 24 was an additional cleaning, and 25 is where we're standing now, where a lot of the carriers that have committed, what they want to do, staying into the marketplace, they're staying. Some of the carriers have released some of their products and that they're going to come stepping back in, but the LA fires did not help. It's definitely put a lot of the carriers on hold again.
So I want to ask, how much impact is the California fire has on us, the Northern California resident, on our insurance policy or our coverage?
I just think what it really did is highlight and focus the urgency and the need for getting the insurance industry back on track again. It was a significant disaster, and it's going to have an impact. But this is something that's not new to the insurance industry, to the Department of Insurance, to firefighters. These issues have been known for many years and have been talked about. And until the Californians, the homeowners, are faced with loss of homes and mass devastation, it's finally coming to light. So it's certainly putting a sense of urgency and pressure on Department of Insurance and also the insurance industry, I think.
Michelle, I want to ask you, so when you, oh, sorry.
Yeah, I think it's just add a little bit of perspective on how we got to where we're at today. And my partners on the panel are talking specifically about the business environment within the insurance industry. But fundamentally, and obviously my perspective is a little bit different, we're at where we're at today because the risk has changed significantly. If we go backwards about 10 years to 2014 is where we started seeing significant changes in fire behavior and the weather driving fire behavior within California. And so our overall risk profile has increased, and that's what consequently drives a lot of the decisions that the insurance industry is facing, is that risk profile. If I'm looking at the list of the top 20 most destructive wildfires in California history, that list literally is changing every year. The top 3 fires on that list now are the Camp Fire, the Palisades Fire, and the Eaton Fire. Collectively, those 3 fires have burned tens of thousands of homes. So you combine that significant increase in risk with some of the challenges in the insurance industry that my partner was talking about. And that's really why we're at where we're at today, is not only do we see an increase in the fundamental risk driving wildfire, when thousands of structures are destroyed in a fire, that changes the underlying environment that we're all facing.
I want to add one thing to that, and I'd be remiss if I didn't mention the impact, 2 things. Number one, inflation is having on the cost to rebuild a home in regards to lumber, materials, labor. But the second thing is what's happening with these catastrophes is that an insurance policy is being maxed out when there's a total loss. It's not just repair of a kitchen. You're maxing out the dwelling coverage, you're maxing out the loss of use coverage, you're maxing out the personal property coverage, you're maxing out the entire policy. And when you get into these catastrophes, those exposures add up when you look at insurance companies and them having to be able to back the promise that they say.
Oh, great. Have anything to say
What happened?
before I ask the next question? So
No, go ahead.
I know that some insurance companies, they decide which areas to insure and not. All cities and zip codes are in the fire zone. So can you explain how homeowners and transactions will be impacted? But okay, what are the criteria that you guys decide to provide coverage?
It's really hard to say based upon a general, home. We have to look at specific addresses, because one address in a Cupertino is completely different than a Cupertino address that's in the hills. So there is no yes or no. We have to get all the way down to the nitty-gritty by putting these addresses in by each company to figure out if we're able to insure them. Because what one carrier will say no to, another carrier has the tolerance to take on that particular property. So like I had one client up in the Oakland Hills, everybody else said no, but I did find one company that was going to be willing to take them. So we really need to shake the tree before we actually say no to a particular property.
So I want to ask our attorney, when they decide which area they could insure and which area they couldn't, would that be any legal implication on that?
Not unless it comes under the department. Right off the bat, I forget the most important thing. It would not be a legal issue unless it comes under the Department of Insurance, because they're a private company. They have the choice to insure, and make their own risk calculus.
Okay, that's good. All right, so are there any statewide efforts or regulations in discussion to address this crisis of high costs or like not getting insurance? Do you know any?
Well, I can
The
speak
chief.
to a couple of things from a fire perspective. Everybody should be well versed in AB 38, which requires defensible space inspection as part of a sale transaction within a high or a very high fire hazard severity zone. Those zones are determined by the state of California, so by CAL FIRE. They actually, excuse me, just published new maps for our area this month. Those maps, to your previous question on for people that are looking at properties, they can go to those maps and reference those zones to find out what the state has determined the risk to be. For areas that we provide service to, which are Cupertino, Campbell, Los Gatos, primarily the west side cities, and then also the unincorporated areas of the county. Agents can call us to provide AB 38 inspection. It doesn't have to be the fire department. It can be any individual that's qualified to do that inspection. But the defensible space inspections are really, and defensible space in general, are the most important things that people can be doing to reduce their overall risk.
Okay, so I want to ask the audience in general, are you familiarized with AB 38? Do you know what it is? Fire hardening and defensible space. So the insurance agent here, I want to ask if they are in a severe fire hazard zone. Oh, okay, Carl can say something about that.
Well, so I was going to actually share that. So I work with buyers pretty much throughout the Bay Area. Most of our clients are not looking at houses in that zone. We are working with a client right now in Berkeley. They're looking at Berkeley, and another client that's looking in Castro Valley. They are in that zone. So the defensible spaces, if you're in that zone, and you can find that information pretty much upfront, first page or two on your NHD report. So if you're in that zone, the house has regulations, right, to make sure your house is defensible from fire. So if it spreads out, so it's usually up in the hills, up in the hillsides. So that's the answer to that part.
Right, okay. So for the insurance perspective, if the property is in the severe fire hazard zone, so in the sale, the seller is supposed to provide in that fire hardening form a certificate, right? By the fire department that they are certified to comply with the defensible space. So without that, will the insurance still insured?
So the changes around that one is that some of the carriers will allow for discounts for the defensible space and things that you can do to fire hardening the property. It does not say that the carriers have to insure that property, because if I have a carrier that says, hey, Michelle, I only want to do the city, I don't want any of the zip codes or the locations that are outside of the city, they can continue to say no to that property. So it's more or less more discounts that is offered to the client because of what they did.
Each property is going to be assessed on its own merit when it comes to activating an insurance policy, but it's not only the property itself that's inspected, looking for damage, potential damage, hazards, trip and falls, clutter. They're also going to look at who is actually taking out the policy. Is there a history of claims? Those kinds of things that could deter or limit options.
There is a bill that's been proposed that it's not law yet, but Senator Cortese from our area has proposed a California catastrophe model. So one of the challenges that we've talked a little bit about is, again, the challenges between risk and how to insure that risk. Knowing that the models that the insurance companies use are proprietary to them, he's proposing legislation right now to create a public model that would be able to use that to essentially define the risk in a public way. And again, the hope is to bridge kind of what we're seeing as the fire risk with the insurance industry, so that we can create an environment where these homes are insurable.
Okay, great, thank you. So I want to ask the attorney, if, say, my home is in the high fire hazard zone, I didn't get enough insurance, or maybe not be even have any insurance. If something happened to my home and burned down the whole street or the whole region, am I liable?
In your question, are you the cause of the fire?
Can be in any accident, in the backyard or the kitchen burned.
Well, I mean, so from a liability standpoint, it depends on the cause, right? If you're the cause or your negligence is the cause, then yes, you can be liable.
I see, thank you.
Right. I mean, I guess if your question is like, are you underinsured? Right.
Right, underinsured.
Right, then yes, you become personally liable for it. So I mean, if your negligence causes a problem and you only have $100,000 of insurance and you cause $1 million of damage, then you personally are liable for the other 900,000.
So even the umbrella insurance would not be able enough, right, to cover it?
Depends how big of a problem you cause.
Okay, so let's move on to the second topic, homeowners. Oh, one more?
I think we should distinguish between personal liability and umbrella versus dwelling replacement. Those are two separate line items in your insurance coverage, and your umbrella policy will not extend to cover dwelling coverage. So that's a common misnomer.
Great, thank you. Judy. Okay, so the second one is homeowners and fire insurance, keeping coverage and finding new options. So are there any specific steps homeowners can take to improve their chances of keeping or securing coverage?
So a lot of the carriers now are double looking at your property. Okay, they are doing aerial inspections, they're doing drive-bys. They're almost doing it every year now, especially though properties that are high in value, okay? So, excuse me. So some of the things that they're looking at is roof, trees that are overhanging the roof, and debris, like Birch was saying, any tripping hazards, anything that like people might have, indoor furniture that is outdoors now, old cars that are non-movable, those things are hazards, okay? So they are looking on the aerial, they are looking for all of that, and they will call you out and they will actually send out a non-renewal notice if you are not taking care of your home. They want proactive homeowners. They do not want reactive, because you're reacting to a notice that they gave you, it's too late, okay? So if you're a homeowner now, take care of these things. If the paint's peeling, paint it. If there's something that's there that shouldn't be there, like, weightlifting equipment on the outside, get rid of it. They do not want to see these things. And so they want you to be very proactive with this kind of stuff. Even if you're a landlord, doesn't matter. Whatever ownership you have, take care of your property, because the carriers have no problems in getting rid of you, okay? They're just really gonna kick you out. So those are some things that you can do. And those people who are in the high fire zones, going back to the defensible spaces, there is a list of things that you can do. Like they might be doing fire resistant decking. There might be, eaves, closed eaves that you can do, fire retardant, all those things. There are certain things that the carriers are now looking at. They just implemented in the past couple months.
One consideration might be to increase your deductible on your homeowner's policy. And what that is forcing you to do is it's forcing you to insure for the smaller incidental losses, small broken windows, small theft and vandalism. And now you're leveraging and using your policy for catastrophe. It takes the pressure off of submitting claims against your homeowner's policy, especially in an environment where claims frequency is an issue and can be part of a non-renewal process. And it will also lower your premiums. So as we get into this environment where homeowners insurance premiums are increasing, that's one of your options is to increase the deductible. And hopefully you have an emergency fund set aside in the event that you do need it.
So any proactive fire prevention measures from your perspective, Chief?
Yeah, we know that defensible space works. We know that home hardening works. When we look at these destructive fires, it's important for people to understand that the homes are not burning down because a giant wall of flame coming through. They're burning down because thousands of embers are being spread primarily by the wind. As we saw in LA, that's 80-mile-an-hour sustained winds with gusts up to 100 miles an hour, right? It's not a continuous wall of flame that's coming through. It's literally thousands of embers that are flying and finding what we refer to as a receptive fuel bed. A receptive fuel bed is a old shingle roof. It's gutters full of leaves. It's any kind of combustible material that's adjacent to wood siding or combustible siding on your home. That'll start a new fire. That lights that house on fire. That house then becomes a propagator for additional embers. So it's a continual kind of chain of embers that are getting cast and lighting the homes downstream on fire. We know, and one of the biggest things that has come out of fires the last several years is what we're referring to as zone 0, which is the area 0 to 5 feet from the foundation of the home. So again, as we were just talking about, putting a non-combustible roof on your house is the single most important thing that you can do to limit the spread of fire during the types of fires that are causing these disasters. Either screening or cleaning out your gutters, removing all combustible materials 0 to 5 feet from around the sides of your home. If you have a wood fence that's butting up to the side of your house, changing that to some type of non-combustible material. I can't speak specifically for the Department of Insurance, but the Department of Insurance is utilizing these defensible space standards. They're working closely with the insurance industry to try to tie the efforts that homeowners are doing with respect to defensible space to renewed efforts to expand insurance coverage.
So, all right, so that's good. So any other measures Santa Clara County Fire Department help residents with fire prevention or mitigation? Any programs or community programs?
Sure. So again, the areas we serve, people can call us for a free inspection of their property. We'll come out, we'll talk to them about defensible space, tell them specifically the things they can do to improve the likelihood of their property surviving a fire. Unfortunately for the people online, I have hard copies of a number of checklists, again, that talk about home hardening, how to reduce your risk overall. We have a number of programs that we support, Firewise USA being one of the most significant, which is again, defensible space standards for whole communities. What's important is we can take these actions on an individual basis, but it's also working with our neighbors to do it together. Because again, yeah, if you see it like in Los Angeles, it wasn't just a single home that burned down, it was an entire neighborhood.
Yeah. I am in escrow for a home with severe fire zone. So I think that this app is very useful. It's called Watch Duty. So Watch Duty, right, Chief?
Yeah, that's correct. That is, so that's an app that's available, I believe, on Android and iOS. It's Watch Duty, I believe, is a nonprofit that created it. And it's an app that'll show you fire location, provide more or less real-time data on fires as they're occurring. That's available to the public.
Right, that's right. So are there any alternative insurance options available, such as Fair Plan or surplus lines insurance?
Definitely, there are carriers that will go into the fire zone And it really depends also on the property, right? If the property is old, they're built in 1920s, then there has to be a lot of updates that have to be done before the carriers will even start looking at the property, right? Your home, your major systems, which is going to be the plumbing, the heating, the electrical, and the roof, right? Some carriers won't even touch something that's less than 20, over 20 years old. If those major systems haven't been updated. But there are carriers, right? We always try to start with our preferred carriers first. Then we go to our standard carriers. Then we go to our non-standard carriers, which we call the non-admitted carriers, that they have a higher risk tolerance for a particular home. So we try to go through all those lists before we hit the California FAIR Plan. Because just remember, the California FAIR Plan does not want to be the first, second, or third. They want to be the absolute last on the list when writing that policy. So if you only have a farmer's agent, they don't have any other list. They will go directly to the California FAIR Plan. So I, highly recommend that you guys get, some broker friends on your list and to help you shape that tree until we have that one last remaining leaf, which is the California FAIR Plan. Okay. We don't want to put them in that position until we know it is the last one.
There was an earlier question that asked, what is the current impact going to be with the Los Angeles fires on the insurance industry? And I think we could look at the FAIR Plan to see what the direct impact is. And we know that the FAIR Plan is not going to have enough money to meet its obligation for all of the homeowners that is insured specifically in Los Angeles. And so what that means is that whatever they're short, the difference is going to be passed on to the major insurance carriers that are in California. And I think this falls under all the admitted carriers versus non-admitted carriers. So the admitted carriers now are going to take on the burden that the FAIR Plan couldn't handle, which ultimately means, and we're not quite sure how it's going to work, but that bill is going to be passed on to all the homeowners in the state of California who have insurance through admitted carriers.
Okay, so any other comments or advice to us? I heard that our insurance policy is going to go up 22% this year. Is it right?
Well, 22% is a specific number from a major company who just announced an emergency rate request, which was State Farm. That's in conjunction with, I think, closer to a 35% rate request that has gone in over a year ago to handle the issues that the insurance company is experiencing. But remember, this is an industry-wide issue. And nothing's going to change until competition comes back in the state of California. Once you have competition, then you have people fighting for your business, premiums become efficient. Right now, we're reliant on the Department of Insurance to make that call.
Yeah, so these rates are not just 22 or 35. I mean, some carriers are taking 45, 50. It's all over the board, but they are all taking rate increases. And it's not just homes. It's also autos, umbrellas, you name them. So, let's not just put it in one hole here. It's pretty much all of them.
And I think it's important to put the homeowners insurance premium that you're paying here in California in perspective in relationship to the rest of the country. There's tornadoes and hailstorms across the country, and there's significant loss occurring. And homeowners insurance across the country on average is twice as expensive as homeowners insurance in California. And because we've been in an artificially low premium environment in the state of California, I think the insurance industry and the consumers are paying the price for the forces that have kept the premiums low artificially. And I'm sure there are a lot of people who have a lot of things to say about that.
Okay, any other questions? Any other options for us? We will wait until the end, but any other options for us? That's all, right? Okay, so, all right, so I think it's time to move on to the third topic, which is very close to us, is real estate transactions and fire insurance navigating challenges. Okay, so how's the insurance impacting real estate transactions today? Have you seen any transactions falling apart because of this new contingencies on insurance or something like contingencies on crew report? I think Carl can give us some expert or example.
Yeah, so before I jump in there, just to add a little more context to the cost situation that Birch talked about. I've seen two charts recently. One was back in 23, in addition to how low our cost is compared to the rest of the country. That chart in 23 has California in the bottom 10 out of 50 states in terms of cost, the average cost. Another one I think we saw in an office meeting, a few weeks ago, or last week it might have been, has us, and I think this is more recent, it's still in the bottom third. So it's catching up a little bit to the rest of the country, but we're not there yet. So I think that's the other factor is once that becomes more balanced, we may see more competition come back in, and that may start to stabilize some of the cost. The other thing I was going to add before we jump into the transactional part is all this information, it's valuable not just for our current active clients dealing with transactions. We do an outreach, we do a Zoom meeting with our clients once or twice a quarter. And we just did one recently on fire, and this is the third one we've done, not fire insurance. So all the mitigation things that we're talked about here, it's helpful because those clients that's not active right now, they're going to be your clients down the road. And the more value we can bring to our clients in helping them manage their risk and their cost is helpful. Going into the transactional part, I think the reason Jody asked me to sit on this panel, I had shared in a marketing meeting, we had a transaction in December in Cupertino Townhouse. NHD report says it's not in that defensible space. It's not in a fire zone even at all, either one of the two categories. We've been advising because all of this information we've been getting for the last 2-3 years, we've been advising our clients since 23 buyers. So we work a lot with buyers. Our buyers since 23 to be proactive. What do we mean by that? We tell them before you get into contract and we identify a property you're interested in, talk to your insurance agent. Find out if insurance is available there. Some insurance agents will give you an answer. Some won't commit because they can't really commit until we're in contract. So all of our clients for the last 2 years have been doing this. The second part of our advice to be proactive is as soon as we're in contract, lock it in. So this transaction, they did exactly that. They actually talked to Michelle. So you do have, and Birch now, hopefully if State Farm is back, they would be on top of my list of referrals to my clients. So they got into contract. They thought they had insurance. We get into contract. And by the way, we did have an insurance contingency.
Oh, you do.
And I guess I should touch on that first. So the first thing was the agent pushed back, which I understood because you're a listing agent, you want no contingency or a shorter time frame. So I understand where he was coming from, but we would not give up our contingency. It's the only contingency we have on that transaction. So we get into contract. The first 4 insurance companies they talked to denied. I asked, why do they deny? All 4 said they won't touch Cupertino. So I actually shared this in a marketing meeting and Birch said, and I think I recall this correctly, every insurance company follows their own maps.
Right.
They're not necessarily following the NHD maps.
Can I make a comment on that? There's another issue that hasn't been brought up in regards to an insurance company not insuring a particular address or area, and that has to do with penetration. They may have a significant number of properties they're already insuring in that area, and to add more exposure adds the cost. And so that could also be an underlying reason why insurance might not be provided.
So the next thing that happened is we did find an insurance company that we actually found 2 that would insure. So they went with 1. We thought we were safe, so we removed contingencies, the insurance contingency. I'm sorry, I earlier said that was the only contingency. We actually have a loan contingency. So they remove the insurance contingency. We go down the road, we're getting close to signing off. And the lender last seconds, and they had actually said, we're good to go. The lender came back and said, we don't like the insurance policy. The reason was because I think the roof was older. So because the roof was older, they wanted value coverage. We had at cost. And the insurance company basically said, we don't do value. No insurance company would do value. And I'll pick it to Michelle real quick. I was just talking to Michelle before we started. There's one that does.
So when we talk about value, it's really about replacement costs. It's what the lender is looking for. When the roof gets older and reaches beyond 10 years or 20 years, the carriers will actually exclude from, maybe they say it's only going to be covered for fire and lightning. And then the other one will be saying, well, we're only going to do actual cash value. Those two will not be accepted by your lender. Okay. So this is where Carl's deal is going sideways. Now, at the end of the day, again, California Fair Plan will take it on and they will do it at the replacement cost value. Okay. But again, it could be very expensive, which could ultimately kick your debt to income ratio out. So, you know, again, you have to get as many options as you can, and you have to prepare your clients when you're going into this situation.
Michelle,
So,
can you talk about brokers having minimal access per month or only a certain allotment? So it's important to ask a ton of brokers.
Okay, so to give my example as a broker, when I'm writing for travelers, I can only write one client a month. One, okay? And then when it comes to Safeco, I can only write 4 a month. So let's just say there's 10 of us that are Safeco agents. I might have given up all my 4, but maybe the next guy next to you has some 4, right? So you have to not just have me in your book, you have to have multiple brokers out there, because you never know which one of us has, you know, gone beyond our allotment and then we can't write. So when I say I can't write, it just means that I'm done for the month. Go find another broker that might have some additional, you know, allotment allowable to you. Okay. So that is also an issue. I might have one. Carl might give me a client. I'm like, okay, I'm good. But then I don't hear from him for a while and I give that allotment away. Now what? Right? He comes back and I don't have one for him. I have to wait for the next month for that allotment.
So to continue with my story, so we thought we were safe and I used the loan contingency. We extended it. We explained the situation with the listing agent. We got an extension. And when I thought the whole thing was going to fall apart, the lender came back and the loan officer said they decided to waive the requirement. So we were able to close, but we pushed right to the end and beyond. But 2 other things from this experience. One, I learned afterwards, I think it was at a CR insurance seminar or something, the loan contingency does not actually cover the insurance contingency. So our scenario, if we had fallen apart and the seller wanted to push it, we could not rely on the loan contingency because we had an insurance issue. We already removed that contingency, even though it was connected to the loan, because it's specific. And for those that don't know, so before we would write in an insurance contingency. If you don't know, since I believe December, November, the new release has the purchase agreement has an insurance contingency checkbox. In addition, your contingency removal has a insurance contingency checkbox. So it's a big enough issue, it's showing up in the forms. The last thing I'll share is the other thing that the insurance company made us run through. I had to go back to the property and take pictures of the electrical panel and the furnace. They needed to approve that before they went forward with the commitment. And we've been hearing in our office meetings that, and I see a couple of my office colleagues in our office meetings, that the insurance companies, Michelle kind of touched on it, they are looking at everything around the property. And one of the things we heard recently is they're sending inspectors in maybe within a month after we close. And if things are not right, or as it was disclosed, they will cancel on the spot.
There's, in a lot of homes, they have freestanding fireplaces and fireplace inserts. And one of the requirements we're seeing now is that these appliances must be installed to code. And you have to have a contractor confirm it, a licensed contractor. So a lot of these stoves don't even have the name of the manufacturer, the age, the serial number. So it can become a huge problem, especially with older homes. But that is also an issue insuring a new property.
I want to hear something from our attorney.
So,
So he has collected all those evidences from us already, so now it's his turn.
right, so this is the part where I leave my lane and say a bunch of things I shouldn't. It has always amazed me in our area with the area of, with the custom that has become a lot of non-contingent offers. And so I have a lot of people that come in and want to get buyers that want to get out of deals. And a lot of times they're non-contingent deals. So the start of this question was, do you see people trying to get out of deals because they don't get insurance? And my answer to that question is yes. A lot of times the focus is on insurance. And one of the things that's always struck me as odd in our area with the price that people pay for houses in our area, willing to make non-contingent offers, is how many times insurance is the thing that bugs them. And the comparison I've always thought about is buying a car. You'll see people that go buy a car, they're going to spend 50 grand on a car and they'll go to 15 different dealerships trying to save the last $100. But when they go buy a house, they'll overbid in increments of $100,000 at a time on a house they saw for 15 minutes, and they'll buy it with no contingencies. Completely insane to me. But then now that they're locked in at 2.8 million, 400,000 over asking on a house they saw yesterday for 20 minutes, now they want to come to me and ask, can I cancel because I can't get insurance? And it's like, well, what do you mean you can't get insurance? And it's like, well, I can get insurance, but the insurance is $8,000 a year, and that's ridiculous. And the thought to me is, and I can't say this out loud, is really? That's the part in this process you thought is outrageous? And I think the insurance agents on our panel, right, can't say this. So it's all, it'll be left to me, which is the part that's problematic that people don't want to admit is that for decades in California, we've been allowed to underinsure our houses. Right? The reality is your $2 million house should probably cost $25,000 a year to insure. But we just got used to paying $1,000 a year or $1,200 a year to insure your house, and we want to keep it, right? Just like a bunch of other things we just want to keep, like low property tax bases, right? And I think people just need to start getting used to the fact that insurance is going to cost you more money. And later on, there's going to be one of the questions which is what advice should buyers have, right? And the advice I give a lot of these buyers that want to cancel is, look, you're facing a couple of forced options here. One of your options is you can cancel and lose your $80,000 deposit. You can pay me $50,000, $70,000, $100,000 to take your case through arbitration, or you can just pay the insurance. Right? And sometimes they just realize, they have to, be an adult and pay what it costs to insure their house, right? And a lot of times they just back out of the deal anyway, right? But the short answer to the initial question, now that, kind of my rant is over with, is that, yeah, we do see a lot of people backing out of this. And that's the reason this contingency got written into the contract in the first place. For those of you who don't know, my father was a real estate broker for like 30 years. And one of his favorite jokes to tell is he used to like to show the first contract he ever sold in a house back in 1977. It was 3 pages long. Compared to like the last one he sold in 2024, right? The contract's now 16 pages long, and the disclosures, that other things you got to sign are 100 pages long. And his running joke was, you want to know the difference between 1977 and 2024? Right? And the answer is that's the lawyers that got involved. Every change you saw in that contract was the result probably of a lawsuit. Right? And the fact that the insurance contingency got added to the contract was the result of a bunch of lawsuits. Right? So the fact that that contingency got added last year is because it became a big enough issue that people were canceling and litigating that issue enough. So later on, I'll talk about some of the different lawsuits that I had, and then, you know, as examples that we can talk through. But my answer to the question is yes.
Great. So, real estate agent. So I think if you start smelling something not good, please consult an attorney first before you write up that contract with no contingency and take your client to the risk. Okay, so any other questions
Well,
or
so
answers?
maybe to tag on to that, one of the things I think as an agent for our clients in a transaction, whether you're on the listing side or the buyer's side, is we want the deal to close. Ultimately, that's what's good for everybody. So I'm going to use the insurance as an example, but what I do get pushback from a listing agent in the last year and a half with an insurance contingency, I try to keep it focused on the insurance situation is such an unknown right now. And we just went through this whole last hour and a half that it's really case by case, property by property, depending on how the situation is set up. So we really don't know until we're in the transaction. So I will not, until the insurance question becomes more settled, I will strongly advise my buyers to have an insurance contingency no matter what. I don't care if they said, I've talked to an insurance agent, and I've had several recently. I've talked to an insurance agent, they say they will insure this property. I tell them, we don't know until we're in contract, until we're done. So I won't give that up. I won't let my clients give that up. And I will try to help the listing agent understand it doesn't do any good if we get into contract and you go with a non-contingent without insurance. And then you find out you can't close because there's something wrong with the property from an insurance standpoint.
So I think that's great advice to put our clients, buyers and sellers' interest first. It's not only for the buyer, it's also for the seller. When something's stuck in the middle, it can be very stressful for all parties. All right, so are we ready to move on to the legal and financial ramifications? So what's next? All right, so we are directed to the attorney again. All right, so are you seeing any legal disputes or more litigation arise due to insurance issues? And because of all these things going on, could we see litigation on a larger scale?
So the most legal claims we see are deposit disputes, which are buyers trying to get out because they made a non-contingent offer and then found out about either the inability to get insurance or more often the cost of insurance. And then they want to cancel the deal. And whether they check the box for the insurance or they waive the box for insurance at some point thereafter, right? The insurance part of it's complicated. And a lot of times they're told they can get insurance. And then as they get into the underwriting part of it, the amount of the insurance changes. But for whatever reason, people come in and they say they want to cancel the deal. Can I cancel because of this? And most of the time, the answer is no. You've either waived your contingency or the way the form is written, the cost of the insurance is not a contractual basis. And what do I mean by that? The comparison is, I'll get to this in a second, but just so you can think of it in your head, the comparison to it is the way the loan term is written is different than how the insurance term is written. So the insurance term is just check the box and it just says insurance contingency and you either check it or you don't. So if you don't check it, then you don't have an insurance contingency at all. And if you do, you can then cancel for any reason based upon insurance or not. And if you don't check it, right, then you don't have this insurance contingency. So it doesn't matter what the cost of the insurance is. So so let's say, for instance, you waive your insurance contingency and you're thinking the cost of insurance is going to be $2,000. And then you get into contract and you find out the cost of insurance is going to be $10,000. And now you say, I want to cancel because it's different than I expected. That's not a basis to cancel because you waived that contingency and there's no nuance to it. The comparison would be how the loan term is written. And if you guys can visualize that form, it says, like, my loan contingency is I'm going to get a loan on this policy, on this property in this amount up to this interest rate and pay this amount of points. And if I don't get that specific type of loan, then I could exercise my loan contingency. And that may be ultimately what the insurance contingency evolves to, where somebody says, I have an insurance contingency where I'm willing to pay up to $10,000 a year in insurance. And if I don't get it, then I'm going to cancel on that basis. Right. But right now we're not at it. Right now it's just yes or no. And because it's that black or white, if you don't have your loan contingency, then it doesn't matter what your cost of insurance is. So if you don't have a loan contingency or you've waived it, it doesn't matter what the cost of insurance is. You don't have a contractual basis to cancel. Then the question becomes, well, what happens? And it then kind of depends whether or not you've checked the box for arbitration or not. And the reason is because arbitrations are what are called equitable proceedings, as opposed to a lawsuit, which is heard as a contractual proceeding. If you're stuck in a lawsuit and the judge is, if you're stuck in a lawsuit, the judge is just going to interpret the contract. And the contract just says you don't have a contractual basis to cancel, so you lose the deposit. Pretty black or white, and it's subject to an appeal. And in that setting, the seller is going to be in a much better position. Conversely, in an arbitration, a buyer may have a puncher's chance to win because it's an equitable proceeding. And an arbitrator in an equitable setting may say, hey, that cost of insurance is so disproportionately different than what the parties contemplated at the time the contract was signed. It's so unfair, I'm going to let the buyer out. Especially if there's another statute that talks about if circumstances changed for unforeseen acts of God, which is what, I don't know if you guys remember back in the COVID times, that was the statute people that people were using to get out of contracts. You could make the argument that the reason that the insurance rates are so high or the cost of insurance is so high is unforeseen through acts of God through the wildfires. You could make the argument that it's equitable, you know, it's inequitable to keep a buyer in the contract and let them out. It's not the greatest argument, but it gives you at least a percentage chance of trying to get out of the contract. But on the whole, the buyers are going to most likely lose those claims. The other type of lawsuit that we see are after the close of escrow. The buyer gets insurance, but then after the close of escrow, within 6 months, the policy gets canceled. And then the buyer then finds out that the seller had the same type of insurance problem, didn't disclose it, and the buyer sues for fraud, right? Sues for non-disclosure. And we've had that case twice. And both of those cases settled, but those seem like pretty compelling cases because the duty for a seller to disclose is broader than just the four corners of the property. It's not just the physical condition, right? It also would relate to the insurability of the property. So as a seller, if a seller has issues with the insurability of the property and doesn't disclose it, I think that falls within the duty of what should have been disclosed. And the buyer's going to have a claim if the buyer either has a property that becomes uninsurable or the insurance rate, as one of our cases, the insurance rate went from $2,000 a year to $24,000 a year, right? And then what we did is we made the claim that, hey, over 20 years, that's a $500,000 problem. And that became a pretty good claim that settled for a pretty good, decent amount of money. So those are the types of lawsuits that we see. That we're seeing already related to the insurability issue.
Thank you. Any? Thank you.
Not on the legal side, it just as Anthony was talking, it kind of popped up in my head, something we talked about in our office meeting. So I understand from the insurance side, in terms of the claims, the insurance side, one of the things the insurance companies are looking for is the CLUE reports. How many people remember CLUE reports? So those that's been around, remember CLUE reports was a big thing about 20, 15 years ago. So it looks like they're looking back at the claims history again, but for both the property as well as the buyer. So I don't know if from the insurance side.
I remember like not that long ago, when we write the contract, we always pull the like the crew report. But all of a sudden that thing disappeared. So right now, are we be able to get it from the insurance side, or how can we get like the insurance history?
No, we do not provide the clue report.
So, I mean, the insurance carriers do pull it. We pull it for per location and the insured. And there are carriers that are looking on both sides. Some carriers are not looking on both sides. Some are just looking at the insured. And it really depends, because if they are looking at the location, then we've got issues. The underwriters want to see the new buyer home inspection. And let me tell you, those are never good, because it could be like nice one side and then bad on the other side. And as soon as I look at it, I don't even want to give it to the underwriters, because I know it's going to be a no-go for that insurance. So, but yeah, we don't provide the clues report, but we do run them,
Right.
at time of, when we're doing our research. So,
But I think Anthony kind of touched on it. So in terms of the claims history, whether you have a CLUE report or not, you can ask, and I believe in the SPQ, there is a claims history question for the seller to answer. So hopefully the seller's answering that question honestly, because that's some information, some insight. And then from the buyer's side, we as a buyer's agent need to ask our clients, this is something the insurance company is going to look at. Have you had claims in the last 5 years? Is it 5 years or 3 years?
Yes, 5 years. I just helped my client to fill out the TDS or the SPQ. I asked them, did you claim any insurance in the past 5 years? And they said, oh, I couldn't remember. I think it's 6 years. And I said, you possibly need to check it out with the insurance company, right?
And my understanding, it's not just insurance for your property. It's if there were a rental insurance, any kind of claims, car, anything.
So one of the things that you have to check is, becomes a big problem, is when it's an estate sale. Because if you don't know what your parents did on the house and you're just selling it, they don't know. I mean, I wouldn't know what kind of claims that my parents might have had. And it becomes a big issue when it comes to the insurance side, because now we're pulling it and we're like, oh, there was a location claim for this particular property for 25,000. What the heck happened? Let me know. And they're like, well, we don't know, because the parents died and they had all the information. So it becomes a little tricky when it comes to these estates.
Right. The other thing too is it's not just that from a seller's perspective, it's not just the claims history, it's the insurability. So remember, the standard on a duty to disclose is all information that's materially relevant to the value or desirability of the property. If as a seller, the last time you tried to insure your policy, right, you insure your property, you had to go to 6 different carriers and didn't get a policy that a carrier that accepted you until, 6 hours before your previous policy expired, right? That's probably something that's material that a buyer would want to know.
Yeah, that's good questions. I mean, good answer. Anyway, so I think the attorney talked about that the buyer canceled because of the high cost they discovered later during escrow, right? They want to cancel. But what if this is no fault of the buyer? Is the insurance company unexpectedly denies coverage in the middle of the escrow? It's nothing to do with the buyer. So what options do buyers and sellers have, or what legal rights do they have?
Well, I'll save the whole speech about trying to get contingencies because I lost that fight about a decade ago with people in this area. Because it seems that people that just insist on making non-contingent offers no matter what. But the short answer would be saving a contingency, whether it's a loan contingency or an appraisal or the insurance contingency. And Carl and I can kind of debate back and forth because I'm not sure legally how distinct the insurance contingency and the loan contingency really are. Because if you don't have an insurance contingency, but you have a loan contingency, and the lender says you don't get a loan because you can't get insurance, and you go, well, I'm exercising my loan contingency, I'm pretty sure that's going to hold up in front of a judge. And I don't really, the seller can fight that all he wants. I mean, at the end of the day, you end up fighting on my turf, not a real estate broker's turf, or, and I think a judge would find that to be pretty compelling. So I'm not sure how independent these contingencies really are. I think at some point they become interrelated. But I think that at the end of the day, as a buyer, because I mean, it's somewhat complicated from a buyer's perspective because you're really not going to get an answer with a lender. You can get an answer on your loan ahead of time at some point, right? I mean, you're financially strong enough. You can know if you're going to get a loan. You can't control your ability to get insurance. At the end of the day, an insurance company at the last minute can say, we've decided we don't want to insure that property for whatever reason, and there's nothing you can do about it. So absent having a contingency, you're not, your contingency is the only way that you can secure your way to cancel that contract and keep your deposit. So that's the best way to protect yourself.
So if the contingency is removed, there's no way, right? Either they lose the deposit, they move on without the insurance, find another cash buyer. I mean.
Right. I mean, buying the house without insurance is probably the worst option.
And it's not an option if there's a loan. Right. So.
Right, which only seems to affect 1 in 5 houses in this market anyway.
Right, but just to kind of address what Anthony was saying, I know from my years of experience to stay in my own lane, so I'm definitely going to defer that contingency advice to the attorney in the room. But that's what I had heard in a CR session, that the loan contingency may not cover, may not apply if you had already removed your insurance contingency. I think that's what you were addressing.
Yeah,
but
and
I think
don't get
it's-
me wrong, if I represented the seller, I'd be making that argument,
Right.
right? I mean,
But like I said, I'm going to defer to the attorney.
So I want to add to this because there is a part of the insurance that does touch the lender's contingencies. Because when I write a policy and let's just say it turns out to be 5,000 or 6,000, I've just blown up the debt to income ratio. That person who was right on the edge at 45%, now I've blown it up to 50%. The lender is not going to approve that anymore. So there is some part that it is touching that loan when it comes to that debt to income ratio.
Any more comments? So we're all good, writing contracts, no problem?
oh, the one thing I would add in terms of advice to a seller is to remind your sellers that the one thing when on an as-is sale, once the deal closes, the only risk a seller really has is being sued for non-disclosure. So to make sure that they spend an adequate amount of time on their disclosures and to remind them that this insurance thing has become a big part of the contract. So as an agent, I mean, I would ask them, have you had insurance problems? Not just claims, but is it easy for you to get insurance? Whether it's the area, whether it's the wind, whether it's the hills, for any reason, but that should be kind of mentally on your red flag checklist. One of the things you ask about for a seller.
Great. Okay, so moving forward to our last section, solutions and best practices. We'd like to ask all the panelists So what can real estate professionals do to better assist clients before facing all these insurance issues? What's the outlook for fire insurance in California over the next years? If you can give one piece of advice to homeowners and real estate professionals regarding fire insurance or fire, protection, what would that be? We start from Carl.
Well, I guess from the real estate standpoint, I've kind of already said, it. I think helping our clients understand the situation and how to prepare for it and being proactive, that's the best advice we can do anyway, specific to this issue. So I talk to Birch and Michelle all the time to keep on top of what's going on with the insurance situation. So I've been, I think, parroting what they've been telling me, which is it's probably going to get worse before it gets better. And you got to be ready for it.
I would just say, have a long conversation with your agents. Ask them what the marketplace is looking like, what the environment is looking like, what are the underwriting guidelines that are being put in place for non-renewals, things like that, you can keep ahead of yourself. And it really comes down to prepare yourself, right? I have plenty of clients, realtors that are coming to me saying, can you look at this property, this property, this property? They might be looking at 3 properties this weekend. They're asking me to do some quotes for them so that they can have an idea and understanding of what the premiums are looking like and is it insurable, right? So prepare yourselves way beforehand. And when you do get into that contract, try to bind that policy as soon as possible. Don't wait, okay? Because again, I might be limited, right? And the carriers might be limited in that particular area.
I think there's 2 things you can do. The first thing you can do immediately, I know SCORE and all the members are networked very well. And when there's a call to action politically, everybody seems to step up. And if you're frustrated with the current environment, the best thing you could do right now is to reach out to your representative and give them an earful and tell 10 of your friends to give them an earful, because right now's the time. Everybody's listening in regards to the industry, the insurance industry, the commissioner, the watchdog groups, and especially the homeowners are listening to everything that's going on. But until they feel the pain, they're not motivated to make a change. The second thing, take care of your house, maintain it, and raise your deductible.
Yeah, I'm gonna again bring it back a little bit to if I had a whiteboard behind me, I'd draw a graph and it would have a couple of lines on it. It would have risk, and what risk has done is it's gone from a relatively stable line to a very sharp upturn in our risk. What is driving that? It's fundamentally being driven by changes in underlying weather patterns that are creating more extreme conditions for fire. That's wind, and fire is measured by 3 things: fuel, weather, topography. Those underlying conditions, again, have increased the risk. Another line on that chart is going to be insurability. As the risk has gone up, our insurability has gone down. And that is the fundamental dynamics that we're talking about between at least wildfire and ability to obtain insurance in California. So what I would echo is, 1, defensible space is absolutely something that people can do to better prepare their properties. Defensible space absolutely works. Again, because the type of fires that we're talking about are largely ember-driven fires, and defensible space absolutely helps slow the spread of fire when it's done properly. And then 2, to echo what Birch was just saying, is get involved, because the amount of legislation that is being discussed relative to this issue is significant. And whether that's additional defensible space standards, whether that's new building codes that are going to require homes to be built a different way, all of these things are going to come into play, because what we want to do is we want to return that risk line to a relatively stable line so that insurability then comes up. That's what all of us, irrespective of the perspective that we're bringing today, ultimately want.
I'll be short. I'll just say that as a buyer, try to figure out if you can insure it before you make an offer. And if not, keep your contingency. And as a seller, make sure you disclose any insurability problems that you have.
Okay, I think we have a fabulous panel today. Agree? You learn a lot. So it is very important that we got involved. Totally agree, 100%. So we have resources, a lot of resources from CAR that we can help our clients to understand the current situation better. I think you all receive all these emails, right? Have you read through them? Did you go to that website? Did you print out or send PDF to your clients? And I think it is very, very important before we educate our clients, educate ourselves first, right? If we don't know what's going on, we cannot tell them what's going on. And also always engage professionals. Don't assume and make assumptions. If you're not sure what it is, okay, find it out and find it out objectively, engage the professionals. So I would like to open to the question that you guys have. Jody, you have the.
So we've got questions on Zoom, and if you're gonna ask a question in person, I just ask that you wait for one of us to come over with a microphone, because Zoom can't hear. I'm just gonna ask several of the questions that are on Zoom, and then I'll come and do some in-person questions. I'll start here. Should we have the fire department do an inspection prior to listing a property to help with the new insurance for the buyer and to minimize the insurance contingency?
I'll just talk loud. So I don't know that you need to do it before the transaction. Again, at least for us, we'll offer defensible space inspections that people call our fire prevention division. It's an educational inspection. It's the opportunity to come out, explain to the homeowner what they can do to make their property safer. I think the one thing that people could be doing ahead of time, but it's a costlier endeavor, is looking at home hardening. If you have an old wood shake roof, replacing your roof with a non-combustible roof. If you're going to be upgrading, let's say you have old single pane aluminum framed windows in your home, you're looking at upgrading your windows, you should be considering putting dual pane windows in that have a fire rating with them. So there are some things that people could be doing ahead of time that, again, will better prepare their home. In terms of the timing of the inspection, again, it's an educational inspection. We're not out there to enforce and take punitive action. We're there to educate people so they can make their property more defendable.
Mandy.
You want to pass it to Carl?
I believe if the property shows up on the NHD report in that defensible space, then you probably do need the fire department to come out and verify.
Couple more on insurance. Can the seller get insurance that can be passed to the buyer? That would be nice.
Unfortunately not.
Man, for condos that are also in the master insurance requirements, many associations have had issues renewing their policies and have reduced coverage that the individual owner has to bear. Maybe that's a comment.
That is true.
Let me see if we have one more and then I'll, there was a comment about aerial photos, if they're being used by Google, that they could be old. So I'll say that. And then how long in hours or days do insurance agents typically need to confirm a property's insurability for an insurance contingency timeline?
So going to the aerial photos, the carriers are doing every 6 months. Okay, so they do one like in the winter time frame, and then one in the summer, so they can flip back and forth to see what the foliage looks like during the summer, and then the foliage, what it looks like during the winter. So, you know, I have some carriers that are non-renewing clients, and you know, we can't see the foliage because the tree is empty at this time in the winter time. So we'll flip over to the summertime to look at those photos of those trees so that we can tell the homeowner, hey, this tree, when it's full, it is overhanging your roof, so you need to take care of it. Okay, so the aerial photos are about 6 months.
And can they challenge?
Sure.
Okay. Carl, did you have something?
Well, I was gonna address the contingency question. So, I would prefer a 10-day. There's no magic number. I would prefer a 10-day. We've been doing a lot of 7 days, and we've recently closed on a property in Santa Clara with a 5-day, because that's what we were able to negotiate. And I felt comfortable enough because, as I said earlier, our clients are very proactive. We have them researching before we're even in contract and right on it as soon as we have the "you're in contract" email. So they were on top of it. I don't know if this is a unique situation that we got it confirmed so quickly, or committed so quickly. They actually got it. It was a veteran. The buyer was a veteran, so he got it through USAA.
All right, well, there's some in-person questions. We'll start here.
I had seen recently that actually all of Santa Clara County has been determined to be in a fire zone. Do you know if that's correct? Okay, because I was looking online and it said all of Santa Clara County.
Again, the state released new updated maps, which it's the first time they've released the maps in quite a while. All of the county is not within a, there are 3 primary zones. It's very high, and moderate. The bulk of the areas that border the foothills are in some level of zone. Most of the hillside areas are moderate or high, and then there are several areas that are very high. But those would be the factors that drive those designations, again, are the topography, the fuel model that's present, whether it's grass, shrubs, trees, right, forest, and then fire history actually plays a role in that as well. But it's not accurate to say that the entire county is within a fire zone.
And
Go for it.
so thank you, Chief, for giving that information. But I think what I had heard, out of this is true, is more communities are now in a fires or have upgraded their risk. Is that? Yeah.
So. Yeah, when the new maps were released, there were areas that were put into zones that previously were not in zones, and or the designation changed. So it's accurate to say that more acreage is included in the zones, but it's not anywhere near the entire county.
I was just gonna touch on something you said earlier that I think a lot of people don't think about is the fire may be 1.5 miles or 2 miles away. But to your point, when those winds start and they pick those embers up, something that wasn't in a fire zone is now on fire. And I think that's something that sometimes we don't think about, is that just because the fire is over there, it's gonna carry. And when you get that horrible wind that comes up, and we've had it here in the Bay Area recently, I think that's something that people don't realize, which is why it's, to your point, important to keep everything in your house clean around it, because it hits the wood pile outside, it hits the leaves in the gutter, and now your house just went on fire from something 2 miles away. So I think that's something to think about that people don't keep in the top of their mind. And I think that happened probably a lot in the Altadena and Palisades fires. It was the embers that moved, not the physical fire itself.
Correct. So I want to say a couple of things. One, and I gotta be careful, because it's I want to ease people's minds somewhat. The fire weather that drives the fire that we've seen in places like Paradise, in Sonoma, in Los Angeles, Malibu, I could rattle off probably a dozen other locations. The fire weather conditions that drive those fires are primarily unique to those areas. We do not, and this is where I need to be careful, historically speaking, we have not experienced those weather conditions in our area because we have a very large body of water that separates us from the underlying weather condition, which is high pressure driving winds out of the north and out of the east across a dry land mass, right? Low humidity that creates very hot, dry wind. When you look at fire history, most of these fires occur in areas repeatedly. I would unfortunately forecast that the Palisades area of Los Angeles will experience another fire like what they've experienced at some point in the future. Because the weather conditions that drive it occur there on a relatively, not every year, but every several years, they have winds very strong. Now, again, the thing that's changed is what may have been a 50 or 60 mile an hour wind 20 years ago is now an 80 mile an hour wind with 100 mile an hour gusts, right? We haven't seen that level of severity. The wine country fires, again, go back in time several decades, the wine country region experienced that same basic fire several decades prior. Because of the location of the bay, because of our historic weather patterns, we've tended to be a little bit buffered from those extreme of conditions, okay? So to your point of how does fire spread? The large devastating fires are spread almost entirely by the wind, which are driving embers over long distances, in excess of a mile in many cases. Okay, so again, while you may not see a large wall of flame coming towards your neighborhood, you may see embers falling out of the sky. How many people, the Home Depot fire a couple of years ago?
Yeah.
I live in an area where I've lost my home insurance. I had to get a new carrier. So I'm very experienced in this whole thing. During the Home Depot fire, we were actually quite lucky because the amount of energy so again, fire is just a byproduct of physics, right? The amount of fuel that was burning during the Home Depot fire creates a tremendous amount of convective energy, which is essentially lift that's sucking things up into the sky. It was a very hot day the day that occurred. There were things, this big falling on the ground in Almaden, right? Miles downstream from where the fire was actually occurring because of the power of the convective column. And we were just fortunate that none of that stuff landed and started additional fires. Had it been windier, hotter, and drier, I would all but guarantee there would have been fires caused downstream by that fire, not because the building was next door, but because it's carrying stuff up into the air and dropping it downstream.
Tiny start of a fire, for example, I think Santa Rosa started at like 9 a.m. or 9 p.m. The Santa Rosa fire started at 9 p.m. and I think things are changing as far as technology and resources, but from what I understood, they couldn't get planes and helicopters on those fires until daylight. Is that still an issue?
So daylight versus daytime versus nighttime is not as much of an issue as it was historically, and that was largely because we just lacked the technology to be able to fly helicopters at night. There are now several night flying helicopters available throughout the state of California. Night flying is incredibly dangerous for aerial firefighting because of the altitude at which the aircraft drop water or retardant. There are a lot of obstacles in those environments. So it's still very dangerous, but because of night vision technology, there are more night flying aircraft that are available. The biggest factor that affects aerial firefighting is the wind. The winds that we saw in Los Angeles, Palisades, and the Eaton fire, those winds are to the point that aircraft cannot fly safely during those conditions. So most of the time when you hear the aircraft aren't flying, it's because the winds make it too dangerous to fly. The other condition that we see frequently, and it's more frequently in Northern California, so far areas in Northern California, is an inversion layer which will hold the smoke down in lower areas of the atmosphere such that the aircraft can't fly because of visibility.
A question for the insurance brokers. The let's say that you're forced to use that last option insurance. Is it home fair? Is that what it's called?
Fair plan?
Fair plan? Okay, the fair plan. Let's say that you're forced to go to that option. Do you have to keep that for an entire year, or could you get insurance the following month? And is there a way to contact you and say, okay, you can't write this month, but I know you can write next month, or I think you can. And can I get in line to get insurance the following month?
Take that one.
So yeah, you can change your insurance out of the California Fair Plan at any time. If you do find insurance, of course, they want you to get off of them because they don't want to be there, right? So as soon as you find a viable option that you can get yourself into, absolutely, we can go ahead and cancel that policy. The California Fair Plan will then refund you for the amounts that was not used, okay? And yeah, I have clients that are in the hopper waiting to be, taken in on the next month. And for all of us that are, that have the availability in the allotments, we might be putting you into the next month or the next month after that, right? So that's why I say, don't just have one broker friend, have multiple broker friends, because you never know which one of us is going to say yes.
Okay, are there any other questions? Also, I kind of want a class on fire and what it does. Kind of fascinating.
So with the defensible space thing, a lot of times we as agents are doing things like putting decorative bark. And I understand that the decorative bark is not going to be okay in that defensible space. So now, so now we have to put gravel rock, I'm assuming, is that correct?
Yeah, if you're looking for some type of mulch product, a gravel of some type would be preferable to anything that's combustible.
So that's going to be way more expensive. The other thing is I hear some counties or cities are giving some kind of rebates to help with re-landscaping and making it fire defensible. Is that correct?
So I can't speak to, I don't know of any programs right now locally. I am aware of grants that have been offered through, like Valley Water, I believe over the years has offered various drought resistant landscaping grants. I would say it's not anywhere near the scale of what's needed relative to how many homes need to be implementing defensible space.
Not on the defensible space side, but we do have an affiliate who does, it's called Water Efficient Gardens. So very, very low water, but that probably goes to, she does a lot of gravel and a lot of hardy plants. So that might be something that goes along with the defensible space because she doesn't use mulch and tan bark and things like that. Did you have a question too? Okay, we'll do 2 more questions and then we'll start to wrap up.
Hi, this is Priya. I have a question regarding fire. What is your opinion about new build? New builds are built so close now. Even sometimes you wonder like fire, if there is a fire, it could just boom, just fly over it. And so what is your opinion on that?
There are lots of pieces to the question. So if we're talking about a neighborhood in the middle of the city, again, we've got mature, well-developed building codes that were designed with the purpose of limiting the spread of fire from building to building, right? That is actually the reason we have any kind of separation, because if you go back again several decades, 0 lot lines were very common, right? The reason we have any kind of separation, and those exterior walls typically have a fire rating, recognizing that if the house next door catches on fire, we want to slow or inhibit the spread to the building next door. When we're talking about wind-driven fires, that's where, again, space, and what I mean by space in this case now is space between buildings, what the building is made out of. So does it have combustible or non-combustible siding? Does it have stuff in that 0 to 5 foot zone? when the wind is involved, kind of all of our traditional codes and standards that we've used to, prevent and limit fire spread, are being challenged like nothing we've ever seen before. I mean, that's the reality of it is, would a 10-foot separation instead of a 5-foot separation have mattered in parts of Palisades? No.
And then do we have the places where the fire is likely to have more? Do we have enough hydrants available? That's my question. I'm like,
I was waiting for it. It's a good question. So a lot of what you heard following the fires down south, and the simplest example is if I've got a 16-ounce cup with 1 straw in it, well, it takes a certain amount of time for me to drink that cup. If I put 15 straws in it, guess what? I'm going to drink that cup a lot faster, right? Our municipal water systems are engineered based on fire flow. And that fire flow is based on a calculation of how much is burning at any given point in time. Our municipal fire systems were designed such that there's a fire hydrant spaced every, X number of feet, so that if the 2,500 square foot single family residence is on fire, we guarantee that we have adequate fire flow to extinguish the fire. Same thing in a commercial area. The mains in commercial areas will typically be larger because we demand greater fire flow to put out Home Depot versus, my house. The additional challenge is when 5,000 homes burn down, the main to every single one of those houses is now free flowing because the valves have burned off. And so not only are the fire engines connecting to the mains trying to get water, all of those houses are now just essentially dumping their water down the street. So our municipal systems are not designed for the Palisades fire. We know that. The firefighters know that. When we go into neighborhoods dealing with these types of fires, we're not expecting to connect to the fire hydrant. We're planning for things like dropping a hose into a swimming pool. One of the reasons we require homes in the hillsides to have external tanks is because, again, we know that we're going to need additional water supplies independent of what might be available via hydrant. Hydrant's kind of like our, if it's available, that's great. But we're planning for the fact that we're not going to have the same reliability and water supply that we would have in a neighborhood.
Any more questions? I think it's about time to wrap up. And thank you so much for all our amazing panelists. And I would say that we have a fabulous discussion this afternoon. So if you want to stay a little bit to talk to